All right. Now the company in focus is Insecticides India. Rajesh Aggarwal, MD of Insecticides, is now joining us. Rajesh, the view on the street is now that the business environment for companies such as yours is likely to improve quite significantly in the next few months and quarters versus how challenging it was actually last few quarters. Expectations are favorable monsoon, but expectations are one thing, results are another. How are the inventory levels? What is the view on pricing, which got completely destroyed or hugely under pressure last few months? How concrete is this expectation in your view?
Yeah, good afternoon. So since we are starting from the last year, after post-COVID, there was a continuous fall in the prices and the market was looking for some space to settle. But the good part is the prices went up and they come down to a level and now they have bottomed out already. And again, due to the change and turns in the international markets, the prices have started moving up again. So which means that at the beginning of the season, the prices have stabilized and now they are moving forward. So since the prices were falling in the last year, so their inventory levels in the trade were reducing because since people knew that the prices are falling, that they never wanted to keep the inventory. So the trade is now has a vacuum. They need the material. The start of the season is very good. There are scanty rainfalls, but the preparation of the fields have started. At many places, different crops sowing has also started. So sentiment is very, very positive. Upbeat, good sales in June. And I believe that this quarter should be a very positive quarter, followed by the next quarter, where the expectation from monsoons are very, very good. So we expect that this year has to be very good, actually. And the season forward, the Kharif season in particular, should be good.
Rajesh, so this is a very positive commentary coming in from your side. Talk to us about versus how did you close 24? How improved will year 25 be versus that, both on top line front as well as on profits?
Okay. If I compare 24 we are expecting a good increase, but we ended up with 9% increase. But if we look at the industry, the industrial growth was almost nil, rather negative. So still we could register 9% growth. The major reason was the launch of the new products and our focus towards these new chemistries and taking our success in taking these products to the market. So I believe that we are very successfully able to do that. So there were high price inventories which were there in the past 2 years and they were having the impact on our last year performance, though we could recover and come to 100 crores of PAT margin in the last fiscal. But still, we need to improve our EBITDA margin a lot. And I believe this EBITDA margin should start going up from the first quarter itself. Because now, whatever is the inventory in our system, it is all the low price inventories and the market prices since they are going up. So very, very positive. So, and the new product which we are launching, they are getting very good success. Like just to show a comparison, in last 4-5 years, whatever since 20 to 24, whatever we have launched, so these products itself have contributed more than 500 crores to our brand business of net sales. So which means that the acceptance of the market for our new launches is very, very high. And these are creating a very good space in the market. And we'll continue this with new launches in this month also. And this will continue in this season also. So we are very, very optimistic that we should be able to grow both in top line and bottom line. In top line, I can say that we should grow by double digit and bottom line should be much better than that.
So close to 2,000 crore is what you did on the top line with 8% EBITDA margin and roughly 100 crore kind of profits. For 25, how much improvement do you see to that? 20%?
It is very clear that in terms of the EBITDA margins, we wish to reach near the double digit and cross that. So my 2-year vision is very clear that we shall be crossing 10% mark and we shall be somewhere in the double digit. So we are keeping our fingers crossed. It's a little early to comment about this year, but I would say my first quarter results will be laying down the base for the complete year. So if we reach near to 10% in the first quarter itself, then I think we should be able to continue that actually in the full year also. And regarding the top line, So we are just maintaining a growth level of 10% is something I'm saying because we are not running about the around the sales numbers. We are working on premiumization of our product. So the entire focus is that we bring the new generation technologies, we take it to the farmer, we make them popular, and that is the vision of the company. So from here, I can say that you definitely will see the growth in the top line, but the major focus will be to build up the bottom line as well.
Right, Mr. Aggarwal. Also just in terms of there were some concerns that were there last year on the export front. How is that business now shaping up? All those issues are, wrinkled off, or there are some still glitches that we are seeing?
Course, still have a lot of issues because as such, India is in a better off situation that we don't see much shortage of dollars. But if we look at the all developing economies around us in Africa, Middle East, even in ASEAN countries and even South America, so there are a lot of dollar shortages. So this creates a lot of trouble actually in exporting. And then there are hiccups of transportation also because at the moment there is container shortage. The container freight is very, very high and market was a falling market. So there are issues with the international markets due to which the growth in the international market is slow. So we are maintaining international business of about 100 crores from last 2-3 years, which is just 5% of our turnover. This year, though, we have a target of doubling our international business, but still the contribution will not touch the 10% mark in this fiscal also, I believe. But yes, there is a good future, good opportunity that we can take many new things to the international markets. We are working on that.
And Mr. Aggarwal, given that, we are seeing the recovery in rural demand, what is the outlook in terms of that trend? Are you seeing anything of an excitement coming in from that front for you?
Yes, there is good rural demand actually, and the crop prices have gone up. The recent announcements are very positive. Announcement on monsoons are very positive. So farmer is upbeat, and I believe that in this Kharif season, there will be full sowing of crops. Though there are some shifts from one crop to another crop in northern area, in southern area, the trend is different. So though there are some changes in the trends, but what I believe is that there will be full sowing in Kharif crop. The one new trend which is visible is particularly in the paddy areas. People have opted for short duration varieties, which means that there will be a chance of additional crop of pulses or maybe some vegetables or fruits in particular in the country. So which means that there will be additional opportunity for the farmer to make money, and there will be opportunity for the input companies all as well.
Mr. Aggarwal, I just have a point that I want to know in terms of the Chinese dumping. That was a concern that came in, right, last year for the company, especially on the margin front. Because of that, there was those erosions that came in. How is that easing off now? And, is that something that is sorted out?
China has almost bottomed out, and there is some northward movement, slight. So, and the transportation, the container charges have gone up drastically because of some international issues. Now the container charges, which were about $1,000 to $1,500, it has crossed $5,000 today. So which has impact on the prices temporarily, and I don't see this situation improving in next 2 to 3 months, which means that the Kharif season will remain like that. So which means that the Chinese dumping will get a little stop during this season, and since the demand looks to be good in the domestic market, so that will also support. So Chinese prices have already bottomed out. I don't see any further scope for them also to go below from here.
Right, Mr. Aggarwal. Thank you so much for joining in with us and giving us all those updates over there on the agrochemical industry, what's happening for the company as well, and good growth trajectory. Maybe a couple of months, maybe we could see some bit of a pressure in terms of the pricing because freight cost has increased. But yes, keeping an eye out on that.
If you like this video, then like, share and subscribe to ET Now.